This is the Patti Brennan Podcast. Protect your family, plan for retirement, and learn to be financially bulletproof with today's best financial strategies. And now, broadcasting from the Key Financial Studio, nationally ranked by Forbes and a Barron's Hall of Fame top advisor, here's your host, Patti Brennan.
Hi, everybody. Welcome back to the Patti Brennan Show. Whether you have $20 or $20 million, this show is for those of you who want to protect, grow, and use your assets to live your very best lives. I have a terrific guest. I am so excited. Sterling Shea has joined us. He is the head of the Global Wealth Management for Dow Jones and Barron's. And Sterling, I'm not sure what state or what country you have come in from, but welcome to the show.
Thank you so much, Patti. It's a pleasure to be here. I live in New York now, but I'm a Chester County native, so it's always a pleasure to come back to this part of the world.
Now, are you going to see your mom and dad while you're in town?
Well, the sad part is a lot of my family has moved away from this area, but I still have a lot of affection for it. It's so fun just driving around, seeing the road names and all the old places where I grew up.
Yeah, that's terrific. Yeah. That's terrific. Well, Sterling, I have something that I want to announce to you and to all of our friends out there. Ed and I have literally eclipsed a major milestone in our lives, 32 years. And something happened yesterday that has never happened before. You want to know what it is?
Yeah.
Okay, here's the deal. For 32 years, I have been saving for my 4 children's college education, and I wrote the last tuition check yesterday.
How does that feel?
Amazing, amazing. Now, we still have our mortgage. That's our next major milestone. But, you know, it really is. If I were to look back 32 years ago when Michael was born and look forward to this day, because that was always really important to us. And, you know, I sort of do kind of practice what I preach, and that is real financial planning and really thinking about what's important. And I think it's so interesting, you know, to have you here today as the head of Global Wealth Management for such a prestigious organization. And I really want to talk with you today about what trends you're noticing in the industry and what you're finding with Americans today. What are the major needs? Right?
Sure, Patti, I'd love to talk about that. And I hope your son doesn't come back and say he's found a 9-year graduate school PhD program.
Oh, yeah. You and me both.
Might not be the last check.
But if he does, he's on his own, right? You know, he's got to have some skin in the game. And all my kids had skin in the game. So I thought that was important, so they really appreciated it. I sent the text out today, and they all sent a huge thank you. So it was very much worthwhile. So let's talk a little bit about your career, Barron's, Dow Jones. I mean, you've had an amazing run. How did you ever get interested in journalism, and what led you to this incredible role at Dow Jones now?
Great. Well, thank you, Patti. I'm happy to talk about that. This is my 22nd year at Dow Jones. It's been an amazing run. I'm really proud and excited about the opportunity that I've had with the company. Dow Jones, if you don't know it, is a publishing company that publishes the Wall Street Journal and Barron's magazine. This is the 98th consecutive weekly year, or 98th year of Barron's magazine, which publishes weekly. Now it's a global multimedia destination, publishing across print and online. We've really grown newsletters and all of the different channels in which we're distributing content. Our sister publication, the Wall Street Journal, is designed to give you daily news and information. Barron's is publishing weekly, but provides greater context and analysis and forward-looking, comprehensive market analysis.
Okay, so that's really interesting. That's a great way to distinguish between the two, Sterling. So the Wall Street Journal this is what happened yesterday. This is the markets, this is the economy, there's some news, whereas Barron's tends to take a deeper dive into real analysis and helping all of us, Americans, advisors, et cetera, understand not just what happened, but what we should do about it.
Sure, yeah. Clarence Barron was the, interestingly, owner of the Philadelphia Stock Exchange at the time. He left that position and founded Dow Jones and Company, became publisher of the Wall Street Journal. He came out at that time with the idea that the journal would give you news each day to help you live your life and make decisions. Barron's would be published on the weekend to give you forward-looking analysis while the market's closed, so that you can be prepared for the week to come and understand what was going to impact your investments and other facets of your financial life.
That's terrific. That's fascinating. And what is really interesting is that you guys are breaking away from the pack. In other words, you are going digital and you're really giving timely advice or at least guidance in terms of, thought leaders in the industry, both in America as well as abroad.
Yeah, we're trying to be global in our coverage. We are constantly looking for new ideas to better inform investors. We want it to be a decision-making platform. It's evolved a lot over its 98-year history. The print vehicle is still important to us, but we're agnostic now as to how you access Barron's content, be it through an app on your mobile device, be it through the website, or in print.
So given your history and given the number of years you've been with both organizations, is there anything that has changed, or are there any trends that have surprised you?
Yeah, when I started at Barron's, I was on the commercial side of the business, and I was in Boston at the time, and a lot of my friends were financial advisors. Other friends were in the financial services industry, and one of the things that fascinated me was it seemed like in the mainstream media, there wasn't enough positive publicity around the good work that the very best financial advisors were doing. The mainstream media seemed to focus on the bottom 1% of the industry, people doing bad things, the criminal element, which really painted a false stereotype. And when we went out to meet with great financial advisors, we saw people of tremendous acumen and talent and passion trying to help clients have better financial outcomes. And no one seemed to be telling that story. We looked at the opportunity of that to cast our spotlight on people who we thought were doing a very good job. And by focusing on the very best financial advisors that we would identify through a journalistic process, we would be able to tell a better story to investors and our readers to enable them and encourage them to find quality financial advice. And that's changed a lot over the 2 decades that I've been here. We've seen that evolution, and we've seen more attention being placed on the very best people in the wealth management industry. And I think that's to the betterment of investors.
I would have to agree. I think that what I am seeing, and I think that you are as well, is that there is becoming less of an emphasis on performance and investment management and more of an emphasis on holistic planning.
Yeah.
Is that what you're noticing, or is that, or should I say, maybe you guys, and I do think there is an element of this, you're kind of driving that in a way.
Well, thank you. I think we have a small role to play. I would agree with you in that evolution of the industry. I think the business of wealth management has changed from what was a performance-driven, benchmark-oriented process to what is more now of a client-driven, outcome-oriented solution. Sounds like a subtle shift, but it embraces the wider financial needs that a client family has. One of the things we're adamant about at Barron's Magazine when we assess and rank financial advisors is we don't consider investment performance as a metric, because investment performance should be a function of individual client-directed risk tolerance and investment goals. And I don't want to penalize someone for taking a very conservative client base. The best advisor should deeply understand what their clients are looking to achieve, what the intent of their family's wealth is, and build a portfolio and investment approach and financial planning and estate planning all around that individually bespoke, tailored client need set.
That is really interesting. So when you think about, and when we look at the industry in general, you've got different segments, right? Mm-hmm. You've got the wirehouses, the Merrills and the Morgan Stanleys in that group, and then you've got independent, you've got family offices, mm-hmm. private wealth managers. So there's different segments of the industry. Is there anything that you've been seeing within each segment or in general?
We're agnostic completely as to the different channels of wealth management. Frankly, I see both excellence and mediocrity sprinkled across the business. There's not one channel that's better positioned or even, frankly, differently positioned to serve clients. It's more about the individual talents of a given financial advisor and their ability to communicate well, deeply understand client needs, and then serve those needs. In terms of the industry trends at large, regulation has impacted the industry. There has been a lot of necessary evolution of process within wealth management. Wealth managers still have to get product. They still have to custody their assets somewhere. They have to get services that then they can provide, banking services along to clients. That's changed and evolved. And there's lots of nuances and to your point, there's 50 flavors of ice cream here that individuals can choose from. That's a good thing for consumers to have that robust choice. And I would encourage an investor who's considering an advisor to meet with a lot of different ones. Worry less about the structure or what you might think you know about that particular channel of the industry. What's much more important is the degree of trust and ease of communication between the client and the advisor.
One of the things that I've always appreciated about your conferences is that you are truly agnostic. And I've had the wonderful opportunity of meeting people in those different channels, and they're really good advisors. The stereotype of the big Wall Street firm doesn't necessarily ring true. There are terrific people who do great work in those business models. It's just a level of comfort, as you say, in terms of who's really doing what they're promising to do for their clients. I think it really comes down to the follow through, don't you?
Yeah. Again, it's much more about the individual than the structure of the business. What our intent is with the conferences that we host that you're referencing, we try to bring the top advisors across the country together to have an open and robust exchange of information. We think really people who are at the top level of the industry see others in the industry more as peers, less as competitors. And the idea, if I can, as an advisor, share something that we're doing to create better outcomes for our clients and build a robust business around that, then a rising tide will lift all boats. And that exchange of information will raise the standard of excellence in the industry, and the end beneficiaries of that information exchange will be the clients themselves.
No question about it. I think that for me, just going to the conferences, learning about the importance of teams has really impacted the decisions that I've made in my business. And I think we're seeing it across the industry, aren't we?
Well, yeah, the team thing is very important right now. We have strong conviction. It takes a village, and it's going to take a lot of people, a lot of resources, a lot of expertise in various functions across an advisor's business to deliver a superior client experience and better outcomes. One of the things that we focus on in our events is the business of being a financial advisor, propelling growth in your business, propelling profitability. And we often get asked, I get asked by friends of mine and consumers that I meet, hey, why, if you're so geared towards creating this better outcome for clients, and it's all about the individual, all about the client, why do you spend so much time in your business talking about growth and marketing and team development and that sort of thing? Well, we believe absolutely that those financial advisor businesses that are most likely to provide superior outcomes, better experiences for clients, better investment experience, are robust, thriving, profitable firms that can reinvest in the business, that can hire better people, build better technology solutions. It takes a robust business engine to create that. Those financial advisor practices that are most likely to do have subpar outcomes for clients are the ones that are struggling, unprofitable, and low growth. So we think there's a direct corollary between the degree to which a business is thriving and its ability to provide superior performance and superior outcomes for clients.
And for a lot of advisors went to school for economics or finance. They're not necessarily business owner type people. It's something that you kind of learn as you go. And to be able to have that format to be able to do some brainstorming, find out what successful people are doing, and then just model it.
Absolutely, and there's no one right answer. Right? There's lots of different ways to approach this business, and that idea of the advisor graduating to becoming CEO of their business, and at a very high level orchestrating a team of people to both grow, develop, and reinvest in the business itself. That also benefits the clients because they're creating that optimal experience. They're reinforcing investment processes. They're leveraging technology within their firm to create a better, easier solution set for clients to engage with.
And there isn't a better time for that to be occurring than now, as we're learning more and more Americans are wanting a trusted advisor. And some of the data, you guys have algorithms for almost everything. I found it fascinating this year to learn from you what's really happening in the industry as it relates to, this gap that seems to be occurring.
Yeah, well, there's still some fundamental facts here. The American investor public, as we see it, remains underadvised, underinvested. When they are invested, they're not diversified properly. So there's such an acute need for people to engage with quality financial advisors. The industry has evolved, but the industry's facing challenges. There's a lot going on right now in wealth management, frankly, financial services at large.
What kind of challenges?
Well, many would argue that this is a late-stage cycle in the investment in capital markets. The fact is the business has grown over the course of the last 12 years with double-digit equity market tailwinds. And in fact, that period from 2008 to 2018, on average, the U.S. equity markets returned about 14.4%. Looking forward for the decade to come, the people that we're talking to are suggesting best-case scenarios in the 5 to 7% range. Now, who knows if that's going to happen? You can read Barron's magazine and see very conflicting opinions on what the capital market forecast is going to look like. But we believe that it will be characterized by greater volatility, lower returns across asset classes, and an unpredictable interest rate environment. It's going to make it harder for investors to earn the kind of returns that will fuel these better outcomes. It'll also make it harder, frankly, with greater volatility for advisors to shift to that behavioral coaching methodology to make sure that clients are making the smartest decisions across the breadth of their financial lives. Some are going to thrive in that environment because they're very capable. They've been looking forward to that opportunity to provide deeper, more meaningful advice to clients. Others whose business is predicated on more of a transactional or brokerage type model that are simply providing access to capital markets, we think are going to struggle in that paradigm.
Sure, because if you're just being measured on performance and performance isn't there for anybody, then the client might say, "Well, what have you done for me lately? What's happening here?"
Yeah,
and to your point, it comes down to the outcomes, especially when so many Americans are not tracking well to retirement. Yeah. They go from that accumulation to decumulation, which makes that future environment even more challenging.
Sure, yeah. The greatest the wealth holders of this country remain the baby boomer generation. That's the Americans that were born between 1946 and 1964. While they're less than 25% of the American public, they hold more than 80% of consumer personal finance assets. That group is turning 65 at a rate of 10,000 people every day. And as they make that transition from the accumulation to the distribution phase, as you referenced, we think their need set is going to fundamentally change, and what they value and are willing to pay for from financial institutions and financial advisors for the decade that's passed will be very different, we believe, than the decade that is to follow.
And some of the fundamentals, such as sequence of return risk, when you're taking money out of a portfolio. I think a lot of clients don't really understand how risky that really is. There's a mantra that they should be more conservative, but what does that really mean? And this need for all of us to really educate our clients through that transition and through that process is going to be greater than ever.
Absolutely. And the best and strongest portfolios will be anchored in fundamental comprehensive financial planning. And the advisor's ability to really root out what that need set is, what are the conditions of this family, look at the estate as a total financial entity, and then build the portfolio around that will be the ones who we think will really shine in this environment looking forward.
And what have you noticed, if anything, in terms of, is there a difference between men and women in terms of how they approach financial advice, financial planning? What are your thoughts on that?
Well, it's something that we've studied very carefully, and we have very strong conviction around the role of female wealth holders moving forward. It's estimated by 2023 that 2/3 of all global wealth will be controlled by women. And if you look at the baby boomer generation as a whole that I was referencing, on average, females are outliving their male spouse in the baby boomer generation by 10 years. And we think they might seek to do business with people whom they identify with. They might want to have a different kind of insight than their male spouse into the way the money's being managed. That could manifest in a myriad of different ways looking forward, but we think there's a huge opportunity for female financial advisors. Now, historically, females have only been about 16% of the business, and that hasn't changed for as long as I've been at Barron's.
And, I find it interesting because I found that going to conferences, when I first started over 30 years ago, the numbers were even more dire as it relates to women versus men. And it's such a wonderful industry for a woman. We can pretty much make our own hours, really develop deep relationships and really help people. It's a great industry. I think there's this perception of it that isn't necessarily true.
Yeah, I would agree with that. If I think about the wealth management industry, there's a lot of reasons why it's not attracting as many young people, particularly female young people, as it should. I think there may be a misperception that it's a sales business. There may be a misperception that somehow the financial services industry is corrupt among the millennial generation. Neither of those are true. Or it could frankly be the fact that the bulk of Americans have almost zero exposure at the high school level to financial proficiency and financial literacy.
And it's wonderful because I think that you guys have launched this Barron's in Education. Mm-hmm. I think that's a wonderful initiative. I'm going to get involved in it. Why don't you talk a little bit about that?
Sure. The Berenson education program is about 18 months old, and it was a program that was born on the idea that we need to do something to increase financial proficiency at the university and college level. So the idea is that we would give a financial advisor or financial entity the opportunity to in fact, sponsor access to Barron's digitally for an entire college, university, or business school student body. And over those 18 months, we now have 66 colleges that are enrolled. We have over 100,000 U.S. students that are then going to get access to Barron's. And just that engagement, that access, we think will foster curiosity. People want to learn more and better understand capital markets. And we're hoping that will, that we're planting a seed that we understand is going to take a long time to grow, but we have to do something to increase financial literacy in this country.
I think it's amazing program in terms of what you're doing for each of the universities and colleges. I know that every week you guys are sending out bullet points for professors to use in their plans, in their lesson plans, assignments to give to the students with really good, deep analytical content so that they can just kind of plug and play and really introduce these concepts, not just to the business majors, which I think initially was the who you thought it would go out to. But, we're looking at providing this for medical students or, kids who are studying communications because, there's some basic fundamentals that if these kids understand them, they graduate, they can begin to apply them, and they can really make a difference in their long-term outcomes.
Sure. Simply the power of compounded interest, right? The idea of fostering investments over time. If you stay invested and diversified over a long period of time, it's almost hard to not have a positive outcome.
No question.
Yeah. And for us, the idea, at the base level, maybe if it was simply creating a more educated investor base, that has great value in it. So we're hoping people will be inspired to maybe work in financial services or perhaps wealth management, but just exposure to that financial proficiency and an increase of awareness and interest in having better financial outcomes, we think is a really important endeavor.
And you have gone global, haven't you? We had the wonderful opportunity to go to London for the Barron's Global Summit and looking forward to Australia. Tell me more about those initiatives.
Yeah, and you did a great job for us over in London. Patti, the Brits loved you. What can I say? For our own business, we want to expand globally. And what we've thought is, where can we replicate this formula of really thoroughly investigating the wealth management business in a non-U.S. market, journalistically creating a ranking of top advisors in that market, and then disseminating practice management content from that ranking that we've learned. We've been active now in Australia for 4 years. It's a very structurally similar market, although they recently had a rather cathartic regulatory overhaul of the business there that's really fundamentally changed the structures underlying the financial services industry. But from an advisor to client level, it's pretty similar. We're very active in the United Kingdom, where you referenced the event where you spoke in July. It's a heavily fragmented market there, but the same paradigm exists. The average United Kingdom individual is underadvised and underinvested.
I found that interesting. They're really underinvested, aren't they?
Yeah, it's a culture of savers, but they need to get more invested in capital markets. The industry, they're great people over there doing incredible work, and the word's getting out, but it's been a period of political distraction in the United Kingdom of late as well. But we're starting an initiative in Canada and Switzerland as well.
Wow, that's terrific. That is terrific. I mean, think about the impact that you have on a global basis and what it could mean for individuals and families, because this is a big deal. This is, as we look at the gap between the people who have and the people who have not, and the pressure that it, puts on governments to, provide social programs to help them. It's really something does need to be done, and it really does, as you said, just comes down to basic good advice and someone that you can talk to be accountable to check in with. You've heard the saying, you don't get you get what you measure, and what you measure gets done. And so just to have that process of measuring progress.
Yeah, thank you. We're trying, and we're constantly trying to evolve our methodology. We're constantly trying to make the ranking better. There's a deep journalistic process that goes behind that. But from our view, when it comes out, we are creating that journalistic ranking, but it's less about 1 through 100. It's more about our message to our readers, and by effect, the American investing public. You might not think there are good people out there. There are lots of them. Here's an example of 100.
Thanks for listening to the Patti Brennan Podcast, brought to you by Key Financial Services Incorporated, where wisdom and caring drive exceptional results for you, our client. Securities offered through Royal Alliance Associates Incorporated, member FINRA SIPC. Insurance services offered through Patricia Brennan are independent of Royal Alliance Associates Incorporated. Advisory services offered through Key Financial Incorporated, a registered investment advisor not affiliated with Royal Alliance Associates Incorporated. The Barron's Winners Circle Top 100 and the Barron's Winners Circle Top 1200 are select groups of individuals who are screened on a number of different criteria. Among factors, the survey takes into consideration the overall size and success of practices, the quality of service provided to the clients, adherence to high standards of industry regulatory compliance, and leadership in best practices of wealth management. Portfolio performance is not a factor. Please see www.barrons.com for more information. The Forbes ranking of America's top wealth advisors is based on an algorithm of qualitative and quantitative data, rating thousands of wealth advisors with a minimum of 7 years of experience in weighing factors like revenue trends, assets under management, compliance records, industry experience, and best practices learned through telephone and in-person interviews. There is no fee in exchange for rankings.